Hey everybody, in the last video we talked about taking double bottom patterns, what they look like and how to find them. I wanted to bring you a live trade of a double bottom pattern on Nvidia. So let me get my drawing tool. Alright, so as you can see right up here, we are on Nvidia. I'm on the 2-minute time frame currently. I'm currently on the 2-minute time frame, and this video is sped up 4 times. The trade actually took 49 minutes to complete. So I sped this up 4 times the regular speed, so you don't have to sit through all that. The whole video now is about 11 minutes long. And if you're curious what a double bottom is, there is a picture of it on the screen. We come down, create a low, find an area of support essentially. Buyers start stepping in. We come up, create an area of resistance, come back down to retest the previous low, and then we bounce. This creates what's known as a double bottom. And this is a live video of what happened on the double bottom. So sit back, relax, and enjoy. Here I'm setting up my entry and my stop. What I'm using here is a tool called Fibonacci retracements. This is just for a visual, an easy visual for my own purpose. On the right-hand side of the screen, the chart is a 2-minute chart. On the left-hand side is a 15-minute chart. I'm not sure if this will pick up my mouse, but you could see that right up here, 15 minutes, 2 minutes. I'll try to put arrows to them. On the top left-hand side, I'm watching the SPY, which is the Spider ETF of the S&P 500. And on the very tippity top, I'm actually covering my account information up. So I went ahead and fast forwarded this. It's a lot easier to see, but so here you can see the entry is at $259.69. The stop is at $256.14. So the way we do this is you can take your entry minus your stop. It gives you a price difference of $3.55. We take our $3.55 and we divide our risk by that. So if you're risking $100 per trade, you would divide $100 by $3.55, which is the difference between the entry and the stop, and that will give you your shares. If you're risking $200 a trade, you divide $200 by the difference between your entry and your stop, in which case it happens to be $3.55. So that is done very easily in an Excel or any kind of a spreadsheet, or just with a calculator. I keep all my trades in a nice spreadsheet that I created. I put my entry, my stop, as well as the type of setup that I traded. In this case, happens to be a double bottom. I was really hoping to draw on the screen for this, but it doesn't look like I'm going to be able to. It's really not letting me draw on the screen for this, which is unfortunate. So you can see that our entry was at 259.69 and the market shot up to 263.25, which was a 1-to-1 of our risk to reward. So that is my first target. Now, I'm setting the left screen to a 5-minute chart so you could see the double bottom easily. I'll put arrows to those as well. And like I said, this video sped up. So on the right-hand side, we're looking at a 2-minute chart. On the left-hand side, we're looking at a 5-minute chart, which is a little bit cleaner. The lines that I have on the screen, the blue line is my 20 moving average. It's my EMA, which stands for exponential moving average. The purple is my 50 EMA. And the very, very light baby blue is my 9. So right around here at this $261 area, we had a nice bounce off of the 3 moving averages, creating a line of support. So a partial is taken off at the 1-to-1, which is the 100% area. And we continue. So depending on your management style, you can either take half of your position. So if you're trading 100 shares, you could take 50 shares off at your 1-to-1 target and then move your stop to break even, creating a risk-free trade. So whether it goes up or it goes down, you can't lose on this trade. Some people do a all or nothing at the 2-to-1 risk reward, which is profitable for them. I personally do not like to be up a bunch of money and then give it all back, because I'm not taking any targets until it reaches 2-to-1. For me, my personality, I enjoy taking a little bit off at each level. So a little bit off at 1-to-1, a little bit off at 2-to-1, and then I tend to let it ride a little bit. So there's actually a nice breakout right here at the $250 area. There's actually a blue line there. Then it breaks out and retests the same area. We've talked about that in my previous video on the how-to series, how to spot double bottoms, double tops, and breakouts. And so there are multiple points of entry, multiple breakouts, and I will put arrows to all of those. So the 2-minute chart is a little bit more choppier than the 5-minute chart. 5-minute chart is a little cleaner, but each candle forms every 5 minutes, where a 2-minute chart, each candle forms every 2 minutes. So right now I took the moving averages off, but as you'll see in a little bit, I put them back on because I'd like to see the 20 and the 50 EMA. I tend to like looking at it to see where price finds support on the 20 and the 50. Typically, those are reaction areas. Those areas are not something to be bought and sold off of individually by themselves. But knowing how to read price action, you can tell. You can kind of tell where the moving averages support the price. So in this case, we have the 260 area and the 262 area, right between 260 and looks like 261.50. It found a nice area of support. It bounced. And while I'm waiting for this thing to go to my 200 extension here, which is displayed as a negative 200 because it's a Fibonacci retracement tool. You can also use a Fibonacci extension tool. I just use the retracement because it's easier. I'm also watching the SPY in the top left-hand corner. It's sitting on a trend line, and it's currently coming up to this white line here. You can see the price of 294.17, which is a resistance area on the 4-hour chart. So as I'm in this trade, I'm watching the spider to see how it reacts off of that resistance area. And it looks so far to be reacting off the area. I'm pulling back a little. And so Nvidia is pulling back with the SPY. So I went ahead and put my moving averages back on. And while I'm in the trade, I like to watch both screens. So I'm watching this large green candle on the 5-minute chart, which is on the left-hand side. And I'm comparing the size of the green candles to the red candles. And so far, if you notice, the green candles are much larger than the red candles. And now we are creating a wick to the downside in this most recent red candle, showing us rejection of lower prices. I took the target areas off the screen just to make it a little bit easier. I was planning on drawing a line there, but my drawing tool wasn't working with this setup. So I'll have to see if I can actually add one back up there again. Spoiler alert, the trade does not actually go as high as I wanted it to go. So as soon as it hit my 1-to-1 target, I took some off, and then my stop went to break even plus a little bit. So even if it comes back against me now, the trade is completely risk-free. So if you want to stick around for another 2 minutes, finish watching the video, see what happens with it, that's up to you. But this is basically how we trade. Trade took about 45-50 minutes altogether. That's why I sped this video up. It's a little bit more entertaining. But as you can see, we're starting to put in all these rejection wicks now, indicating that the price is rejecting going higher, right? The buyers are disappearing. And so we have, every time we come up, we create a rejection wick. We try again, create another wick, showing us rejection of higher prices. The SPY hit the 4-hour rejection white line there on the top left-hand side. And it looks like it's having a pullback reaction to that. And so Nvidia is pulling back as a result of it. And right here is where my break-even stop is, right below this 260 area. So this is where I get out of the trade, right here. So it went 1-to-1, took some shares off. Now, depending on your management style, you could take half off at 1-to-1. You could take a quarter off at 1-to-1. I know people that take 70% off at 1-to-1 and then let the rest roll. Profitability of how many shares to take off when, that's up to you, depending on your personal style, depending on your personality, and how you like to trade. So if you're a trader that will hold it as a all or nothing 2-to-1 target, either it hits double your risk and you get out there, or you let it stop you out, that's up to you. This trade would not have been profitable for you. If you're a trader that likes to take a little bit off at 1-to-1 and then a little bit, the rest off at 2-to-1, that is completely up to you. You would have made some money. So here I paused the video and I put this green dotted line here because this is where I stopped. And I wanted to take a screenshot of what happened the rest of the day. Closes at 4 o'clock, so we are coming right into the close. Got about an hour left, and I'll post that shortly. I hope you enjoyed this video. If you did, hit the thumbs up button, telling the YouTube algorithm that you enjoyed it, that there's quality content in this video so it can get recommended and help more people. And also, if you don't want to miss the next episodes, hit the sub button, hit the bell icon. YouTube no longer recommends every video just because you're subbed. So if you don't hit that bell icon, you're going to miss videos. So if you're enjoying this and you want to follow along, go ahead and hit the thumbs up, hit the like button, and I'll see you in the next video.